Today we're going to talk about the Sarasota real estate market as it relates to August. We're going to look at August data to help us make predictions for the future, especially the near future going into 2023. And I will say this, that it must be really confusing if you're a buyer to navigate the real estate market right now, especially when you read articles that talk about a market crash, listening to YouTubers that have been talking about a real estate market crash, which seems like over 2 years, and the market crash hasn't come yet. Negative news headlines will increase click-through rates in a lot of cases. Having said that, I will say that the real estate market absolutely has changed. It was crazy in the beginning of the year to the point where it wasn't sustainable. Real estate agents were not happy with the situation that we were in because it was almost impossible to have an offer be accepted. Now that insanity has come down to a much more normalized level. Let's look at top line headlines before we actually dig into the data. And please stick with me until the very end because I'm going to give you my market prediction for the Sarasota region. So let's review a negative headline just as an example. Here's one: U.S. housing market declined to worsen in 2023 based on Goldman Sachs warnings. Really making the housing market sound like it's going to continue to crash, but in fact, it hasn't even crashed yet. And so when you start getting deeper into the content of the information, you realize that it was just a frightening headline for you to continue reading on. If you go into this paragraph here, it says, we expect home prices to stall completely, averaging 0% in 2023. That's not a crash. That just means that prices are starting to stabilize into next year. Now, that's Goldman Sachs' prediction. If we look at other credible forecasters such as Freddie Mac, Fannie Mae, they're actually expecting there to be a slight price increase into 2023. So by no means are we in a market crash right now. Now, a lot of people are fearful that if we get into a recession, that the housing market is going to be in free fall. And I certainly believe that we're headed into a recession, whether it's towards the end of this year or next year. But I also wanted to share with you two pieces of information that I believe is going to ease the fear that you may have right now. So most researchers are predicting that if we're heading into a recession, that it's going to be a relatively mild one. And here's actually information from Goldman Sachs, and their title for this article is Why a Recession Would Likely Be Mild. Looking into more details, they're saying the U.S. economy has about a 1 in 3 chance of slipping into recession by the middle of 2023. Goldman Sachs is also saying that they believe that any post-COVID year's recession would likely be mild, with a limited increase in the unemployment rate of around 1%. That's very much in line with what a lot of other forecasters are saying. Now we're going to look at a chart that plots the median sales price of houses sold for the United States. And this is an official chart from the U.S. Census Bureau and U.S. Department of Housing and Urban Development. And what you see here in gray are U.S. recessions. And then this blue line here are median sales prices. And you can easily see just by looking at this graph that the median sales prices hold steady during a recession. In some cases, they even go up. But in the majority of the cases, they pretty much hold steady, right? And if there is a slight dip, it really is just that, a slight dip. Now, the only exception is what happened in 2008. But that recession was a bit different because it was caused by the mortgage collapse itself. So going back prior to 2008, the key takeaway is we look at historical information. The housing market, when it comes to prices, holds very steady during a recession. There's a lot of reasons why the real estate market holds strong during a recession. For one, when we look at new home construction, those tend to slow down right before a recession to recession because developers are looking to maintain their costs or maybe even lower their costs. When we look at prices on homes, those are driven by supply and demand. The less supply there's in the marketplace, the likelier it is that the prices will go up, especially when demand is consistently the same. Now, you can argue that demand will drop during recession, but here's what happens to mortgage interest rates. Typically, it drops during a recession, opening up new opportunities for potential homeowners. And that's because the Fed typically drops the interest rate during a recession in order to spur the economy and also to get more people to borrow money again. Now let's look at what's been happening in the Sarasota market. As of August 2022, we're going to look at single family homes because most of you are going to be interested in single family homes. If you want to look at the data for condos or townhouses, you can just call me and I can run the analysis for you. The sales price being $520,000 median sales price. The average sales price came in at $758,000. Both of them are a drop from July. I typically like looking at the median sales price, and I urge you to do the same. If you look at the average sales price, then that could be heavily skewed by really expensive homes that get sold here in Sarasota. Look at this here, average median sales price, just from a graphical standpoint, looking at the trend line, blue being average, green line being the median sales price. Both have dropped from July to August. In July, the average was $860,000, which dropped to $758,000. Looking at the median, that was $583,000 in July, and it dropped to $520,000. What I also want you to pay attention to in this graph is just how it doesn't work in a straight line. There are going to be periods of time where the prices drop. If we go back to 2021 and we look at the same time period, we look at July to August, it actually dropped when looking at the average sales price, and the same holds true looking at the median sales price. That dropped as well. Now it's a bit exaggerated this year because of the interest rates have gone up, but also a lot of potential buyers are actually waiting on the sidelines for the right time to go back into the market. And it's my belief many of them will come back out towards the end of this year to purchase a home. And so the prices will likely hold steady towards the end of the year. Let's look at the sales price, list price. If it's 100%, that basically means that the homes were selling at list. If it's above 100%, then sellers were getting above the list price. If it's below 100%, sellers are getting below the list price. And so as of August, came in at 98%, so close to list. Where it really was bad in April, that's where we had a lot of the very crazy multiple offer situations where one home could get 40 to 50 different offers. Now those crazy days in the beginning of the year, those are gone. All right, let's look at average days on market. And that basically shows you that it's been taking 27 days for a home to close. That number has been increasing a bit since June, but if you look at it relative to 2021, 2020, and 2019, it's still a relatively low number. Now let's move on to the average sales price per square foot. That's dropped since July, where it was $380, and it dropped to $347 in August, and that just goes to show you that the prices have come down slightly. I do believe that this is a summer slowdown that we usually feel during the summers. Inventory has come up and it actually dropped slightly in August. What I also wanted you to pay attention to here is how the inventory is still relatively low given 2020 and 2019. In a healthy market, typically you want to have 6 months of inventory, where now we're getting closer to 2.5 months of inventory. So what's been going on with new listings in the market? Let's look at this chart here, which you can see in May of this year, this is 2022, May, it actually peaked at 620 new single family homes to the market, and then it started to slow down. And really the peak that we're seeing right around March, April, and May is when the interest rates went up and when there was so much talk of a potential real estate market crash coming. So sellers were fearful. They rushed to the market to list their home, and now that they're done selling their home, the new listings are going back down, and that's not necessarily a good thing. If you're a buyer, let's just say demand increases after the summertime, then that will put pressure onto the real estate prices. If you found value in this video, please like this video, it does help out. And also let me know in the comments section, what do you think is going to happen next when it comes to the real estate market? Now, if you're somebody who's looking for real estate in Sarasota, Venice, Bradenton, Lakewood Ranch, all the surrounding areas in Sarasota, I can absolutely help you. It would be my pleasure to help you. Thank you so much for tuning in today. I always appreciate it when you do. Take care.